Hello and welcome to Business Daily. I'm Mark Broom, filling in for Jung. Before we get started, let's take a quick check on today's highlights. Korea's exports nosedive, falling by their biggest margin in 6 years in August as low oil prices cause a sharp drop in global trade. This while consumer price growth sits in the 0% range. Emerging markets, including Korea, are still reeling from a plunge in Chinese stock markets and feeble growth. How much risks do these economies face? We sit down with an expert. Korea's exports fell by the quickest pace in 6 years in August, continuing an 8-month streak of negative growth. The Trade Ministry said on Tuesday that exports amounted to $39.3 billion last month, a drop of nearly 15% from the same month last year. The government attributed the decline to sluggish trade figures in goods and those related to low crude oil prices, as well as weak demand from China. Meanwhile, Korea posted a trade surplus for the 43rd consecutive month in August as imports dropped 18%, even more than exports compared to the same month last year. And Korea's consumer prices still can't pick up a head of steam, with growth sitting in the 0% range yet again in August. Low global oil prices and a drop in utility prices are continuing to put downward pressure on inflation numbers. Kim Min-ji has more.
Adding to concerns that Asia's fourth largest economy may have already entered a deflationary period, growth in consumer prices remained in the 0% range for the 9th straight month in August. Statistics Korea says inflation was at only 0.7% last month from the same month last year, unchanged from July's figure. The agency attributed the low inflation number to low global oil prices, as well as a drop in utility fees.
Agricultural prices rose 3.4% on year, while manufacturing goods dipped 0.1%. Prices of electricity, water, and gas fell 11.3% from a year ago.
The latest figure also raises doubts about whether consumer price growth will be able to meet the central bank's annual target band of 2.5% to 3.5%. The Statistics Office, however, brushed off deflationary concerns, saying that core inflation, which doesn't include volatile food and energy prices, was still up 2.1% on year. In response to the report, the Finance Ministry said it's keeping an eye on the market prices of agro-fisheries, energy and rent, things that have a direct impact on people's lives, to prevent excessive price hikes. Kim Min-ji, Business Daily.
A new-look Samsung C&T started operations on Tuesday as the de facto holding company of Samsung Group, Korea's biggest conglomerate. Samsung says the merger that formed the new company adds to the group's synergy, but many see it as a way for Samsung's heir apparent to solidify his grip on the business group. Song Ji-sun has the details.
Samsung Group's construction arm Samsung C&T opens a new chapter in its history this week, after its recent merger with Samsung's fashion affiliate Cheil Industries. With a market capitalization of $23 billion, Samsung C&T becomes the fourth biggest entity on the local boards after Samsung Electronics, Hyundai Motor, and Korea Electric Power Corporation. After a matter of months since Cheil Industries went public, Samsung C&T won approval for the merger from 70% of its shareholders in mid-July. Jung, the only son of the group's ailing patriarch Lee Gun-hee, is the biggest winner from the merger. He immediately acquires a 16% stake in the new de facto holding company. The group has also simplified its complex web of cross-shareholding through the restructuring and saved billions of dollars in inheritance taxes in the process. Of course, it wasn't all smooth sailing as the company was locked in a 2-month-long legal battle with US-based Elliott Associates, who sought to block the move, claiming the terms of the merger did not match the value of the shares. Samsung C&T hopes to achieve annual growth of 10% with the synergies stemming from the merger, to hit $55 billion in revenue by 2020. Its ambitious goal is to foster the biosector as a new growth engine for the group.
Although Samsung claims the merger is aimed at creating more synergy between their business sectors, shareholders are aware that's not the only purpose. Samsung still has a few more M&A scenarios in the works to further strengthen Lee Jae-young's control over the group, especially to increase his stakes at Samsung Electronics.
For the time being, the new holdings firm will be headed by 4 chief executives from the 2 units in charge of each division: construction, trading, fashion, and resorts. A new chairperson will be elected later this week. Song Ji-sun, Business Daily.
Korea's fall recruitment season is approaching and job seekers are starting to get busy preparing for various tests and interviews. But as big companies change up the way they hire new talent, more competition is expected, especially with the country's youth unemployment rate standing at nearly 10%. Jung has more.
All these students are lined up to get a seat in the university's main lecture hall. But inside, it's already swarming with people. During recruitment season, it's common to see such large gatherings at information sessions hosted by major companies. Students use these opportunities to get any information they can on prospective jobs, especially given that qualifications for positions are changing by the year.
Whether it's based on student club activities, internships, or part-time jobs, we look at how much experience candidates have in related fields and what kind of efforts they've made.
Before, so-called specs or score-based qualifications like English scores and the number of certificates were considered more important. But now, large firms are putting greater emphasis on communication skills or writing capabilities. Take Korea's biggest conglomerate Samsung, for example, which is rolling out a new recruitment system in the latter half of this year. The group has scrapped its 20-year-long system and added to the hiring process a work suitability test and an interview designed to assess the creativity of candidates. While the aim is for companies to get a broader understanding of their applicants, it has flustered those who are trying to prepare for the job market.
As someone trying to land a job, I'd actually say it's more confusing than trying to pad my resume.
And with recruitment season just around the corner, applicants will likely have to pore over specific qualifications listed by companies as they face stiff competition in the job market. Lee Ju-young, Business Daily.
The economic spillover from the recent rout in China is continuing to affect world markets. Emerging countries have been hit particularly hard and the value of certain currencies have been plummeting. Let's take a look at the current status of emerging economies in these times of increased global market risk.
Jitters in emerging markets have started to hit countries from Southeast Asia all the way over to Latin America, especially as worries continue from the global sell-off triggered by China's market rout and signs of slowing growth. The value of emerging market currencies have fallen sharply, with the Korean won sliding by 1.5%, the Malaysian ringgit by 9.9%, and the Russian ruble, which plunged 13.3%. As foreign investors turn to safer assets, bond yields in emerging economies such as Brazil, Turkey, and Indonesia have skyrocketed. Some market watchers predict EM indices will shed as much as $8.7 billion in foreign investment this month. On top of worries extending from the world's second-largest economy, the looming rate hike from the US and its potential effects are adding to concerns about emerging markets.
Now, for details from an expert's perspective, we are now joined by Professor Yangjun Seok from the Catholic University of Korea. It's very good to have you with us, Professor.
Happy to be here.
So, emerging countries have garnered a lot of attention and are very popular with foreign investors. Could you tell us a little bit about the significance of emerging economies?
Okay, well, we've seen this type of boom-bust cycle before. What happens is the interest rate or the returns on the advanced countries' stock market or bonds become very low. And then you have international hot money trying to seek the highest profit, and they see an emerging market which seems to do well. So they bring a lot of investment into those emerging markets, and then those emerging markets experience a boom. But when the situation becomes a bit unstable, they become a bit unsure whether these emerging countries can pay the money back, or if the interest rate, the returns on the advanced country markets rises, then you see a whole lot of money going back out again.
Yeah, and what kind of effects and how much of an impact have emerging economies had in the past? You touched on it briefly there, but can you give us some specific examples?
Okay, well, you can take 1997, 1998 Asian financial crisis as classic examples. You had very low interest rate in Japan because they were at the beginning of their last 20 years, and the Japanese investors, as well as the European investors and American investors, were looking for someplace good to invest their money in. And they saw Philippines, they saw Thailand, and to a lesser extent, they saw Korea. So you had a lot of capital movement coming in. You had a lot of foreign banks offering money to lend at a fairly good rate to these countries. And then when it seems like they borrowed too much, they suddenly drew their money out, and that was the spark for the financial crisis.
Yeah, and emerging countries have been hit especially hard by the most recent China market rout because they're so heavily dependent on the Chinese economy. But going deeper into specific countries, 3 Southeast Asian countries, Indonesia, Malaysia and Thailand, and even Turkey have been affected seriously by this. Why have those countries been so badly affected in particular? Okay, well, there's different reasons for each country. For example, Indonesia was involved in a similar problem like this in 2013 when the last time that the Fed was thought to be raising their rates. And their problem was that they had very low foreign reserves. And they had borrowed a lot of money, so a lot of lenders were afraid that they won't get their money back, obviously. And then for cases like, say, Turkey and Malaysia, they're caught up in a corruption scandal. So that made their financial markets unstable. And when the Chinese devaluation and all this worry hit, I think those countries were hit the most because they were vulnerable with that corruption scandal. Yeah, absolutely. So it's not just the Chinese market rout that happened, but everyone, of course, has their eye on what the Federal Reserve is going to do in the coming months. But some watchers say the sharp drop in emerging economies' currencies could lead to a foreign exchange crisis like the one that happened in 1997, 1998 that affected Korea so badly in most of East Asia. Do you agree with that assessment? I think there is some danger, especially for some countries. Luckily, Korea is not one of them so far. But for countries like Indonesia, they do have low reserves right now. And the other countries you mentioned, the corruption scandal, if they have relatively good amount of foreign reserves, then they can use those to try to get away from having a financial crisis. But if they lose the domestic confidence so that people don't want to hold their own currency anymore and start switching them into dollars, and if you have that kind of capital flight from domestic people, then there's no amount of foreign currency reserves that can cover it. Yes, nervous times for people heavily invested in those markets at this turbulent economic time. And China, the world's second biggest economy, often labelled the factory of the world. But the country's sluggish growth is really starting to impact countries that export great amounts of natural resources. We're talking countries like Russia and Brazil. What kind of effect are we seeing there? Okay, problem is worsened because everybody thought that Chinese growth would continue for a lot longer. So what we saw before was the commodity prices, the raw material prices, oil prices went up a lot partially because the Chinese demand for them was high, but they expected that Chinese demand to continue growing. And now suddenly the Chinese growth has stopped, but it takes time to build up supply. It takes time to lower supply. So now we're in a state not only of lower demand from China, but oversupply because these countries overproduce their commodities because of the higher prices that they saw in the past. And Korea, of course, we must say, like many other countries around the world, is very heavily dependent on China, biggest export receiving country from Korea. And it also, of course, Korea exports a lot to emerging economies, especially in this region. Does it mean the recent turmoil in the emerging economies and also China, what kind of effect is this going to have on Korea?
Okay, well, Korea, I think right now is fairly safe from the kind of financial crisis that we see threatening, say, countries like Indonesia or Venezuela, because we have such high foreign reserves right now. We can pay back the short-term lending by foreign investors. But I think the lower commodity prices we saw earlier, the slowdown in China, they all seem to indicate that the future growth is not going to be that high for the global economy. So that signals more of a long-term problem for Korea, since our exports are probably not going to rise very much. And we've been sort of counting on exports to try to spark the Korean economy.
Well, it's certainly a problem not only facing Korea, but the region as a whole. Well, thank you very much for your insights, Professor. Thank you. And that brings us to the end of the show. We do hope you enjoyed it, and we'll be back tomorrow with more business news that matters to you. Thanks for watching and have a great day. Goodbye.